The topic of the presentation, you too can fail algebra and still be successful, which is exactly what I did. And it may be helpful. Before I even give, I'll get a little bit of my background. Before I really dig into it, I want to go through a few basics. But to just set the stage, go to the next page. I want to put up a copy of my transcript from prior to transferring into Purdue. A couple of things I'd point out here. First off, 5-hour college algebra and trig in E. They had to make up a new letter because I did so poorly in that. So no credit there. Alcohol and society, a C. With as much practice as I was getting, I'm kind of shocked that I couldn't have done better on that. The accounting, a C. Criminology, my wife has a PhD in criminology and I got no credit. So, which she finds fairly amusing. So not the, and you know, principles of effective speaking, a B, but that was 25 years ago, so give me a break on that. So overall, I think the point I'm trying to make there is it's not all about what the grades are, and especially grades in what are typically thought of or perceived to be tough classes like algebra and calculus and accounting and finance, which is going to be a lot of what I want to try to talk to you about today. But before I even get into my background, let me give you a little bit more perspective on some of the basics. I want to make sure that we all understand so that we're talking about the same thing. So let's go to the next one. Hotel. So if I just get a show of hands, actually, if maybe someone could tell me, does anyone can tell me what the difference is? I know Bruce White came and spoke to you guys a couple of weeks ago, right? What's the difference between what Bruce White and White Lodging does and what Marriott does? Do people get that? If they don't, that's fine too. And by the way, please, this would be such an easier 50 minutes if you guys ask questions. So just please, if you can. But who anyone?
Marriott provides the brand and White Lodging runs the brand for the hotel.
Right. So Marriott, that's exactly right. So Marriott puts the name of the hotel on, but does Marriott own the hotel? For the vast majority of properties, they don't. And it's, for the most part, it's the same thing with Hilton, it's the same thing with Starwood. All they do is they provide the name and they provide the operating standards. No different than McDonald's. You have individual people that own the hotels and sometimes separate people that actually manage the hotel for those owners. So there's the way a hotel runs is you've got an owner who's in fact an investor who invests their money into the property because they think they can make money by buying a hotel. And then you have the actual hotel operator. And then sometimes you have people in between that. But first off, so you've got owners. Who are the potential owners? So you've got individuals. You have someone who's a wealthy individual that says, you know what, I think I can make more money buying a hotel than doing something else. I'm going to invest my money in a hotel. You have pension funds. So for example, Purdue has a pension fund, which is all the various faculty of Purdue. They contribute in for retirement, their funds in for retirement with the expectation that they're going to get money back in retirement. Well, Purdue has to do something with that money. They have to invest that money into different types of investments. And virtually all pension funds have an allocation, a portion of their funds that they want to put towards real estate. And part of their real estate allocation is to hotels. So sometimes pension funds like Purdue could actually either directly or indirectly invest in a hotel. Private equity. So private equity is typically, pension funds can sometimes do private equity. Private equity is what I did at Goldman Sachs, which is you have, again, often individual investors, pension funds, various people that want to invest in hotels or want to invest in real estate, but they don't have the expertise or the time to go and look at individual investments. So they hire these private equity funds to go do that investing for them. And in return, the private equity funds get paid a lot of money. And then you also have public companies like REITs. You're familiar with Host, what used to be Host Marriott, LaSalle or Sunstone. Any of those names ring a bell at all? A little, like Host? Host is the biggest, Host is a publicly traded company. It's the biggest hotel REIT out there. Those are all potential, I'll get into that a little bit more in a bit. Those are all potential owners. And then in terms of operators, you've got the brands, just like you mentioned. You've got Marriott that puts the flag on, but on some hotels, they actually manage those properties as well. Right? So there are some brand managed hotels. Again, not necessarily owned by them, but they manage them in addition to putting on the brand. And then you've got third-party operators like White Lodging, Bruce White's company, that says, okay, you, the owner, I'm gonna manage that hotel for you. We're gonna sign a franchise agreement with Marriott. Marriott's gonna put their name on the hotel. I'm gonna run it for you, and I'm gonna make cash for you. I'm gonna make money for you. And then you also have independent hotels that have no brands at all. I think Jody was here last week. I think she talked about some properties that have either some boutique hotels that either have no brand or have a fledgling brand or a brand of just a few properties. And then I mentioned there's sometimes people that go in between the hotel operator and the owner. So like I mentioned, you've got the franchisor, and then sometimes you've got asset managers. And asset management is something that I do. And what's an asset manager do? Asset manager helps to represent the owner, the person who's invested the money. And again, sometimes it's an individual, sometimes it's sometimes it's a fund, and sometimes it's private equity. But someone who presumably knows something about how to run a hotel and hotel operations, they can help represent the ownership's interest with the management company and with the brand. So when they think that that a hotel can be run in a different way to make that hotel more valuable, they help have those conversations with the management team. And when the ownership or the individual investor says, geez, why isn't this property making any money? The asset manager can speak more in the language of the investor in terms of finance and help them understand what the issues are in language that makes sense to them. There's also a variety of, there's consultants, there's lenders, because lenders, again, often, someone who wants to buy a hotel, just like when if your parents bought a house, they don't put all the money down in the house. What do? They get a mortgage, right? That for the vast majority of the cost of a house costs $100,000, $200,000. Are they putting down $200,000 cash? No, right? They're getting mortgages, right? And they're getting a mortgage that's 80% of the value, right? Something like say a $200,000 house, $160,000, and they only have to come up with $40,000, right? It's the exact same way with hotels. So the lender who, but we're not talking about a couple $100,000, we're talking about much more. And the lender is going to take a very active interest in whether or not that management company is running the hotel to its optimal fashion. So somebody who invests $2 million, say, someone who invests $2 million, how much return should they get? How much interest should they get? You guys all have like local checking accounts, right? How much interest are you getting on those checking or savings account? Like 0? Maybe a little bit more than 0, maybe like 0.1%, something like that? Nobody's actually answering this question. Yes, I got to hear something. Is it like virtually nothing, right? Yeah. Thank you. Okay, so how much did you expect in different investments? So let's look at a couple different things. There's savings accounts, there's bonds, there's CDs. You can put your money there, right? Or you can put your money into office buildings, right? That's another form of real estate. Or you can put your money into hotels. What kind of returns should you invest? Should you expect? Should you expect higher returns in an office building or in a hotel? You should, thank you. Why? Because you're taking on more risks. Hotels are inherently risky. You know why? And they're more risky than virtually any other kind of real estate. Why do you think that is? Anyone? Why is a hotel riskier? Why is a hotel riskier to invest in than, say, a savings account or a bond? Exactly, right? You're guaranteed, you invest in a savings account, the government is saying, we're going to ensure that no matter what happens, the world could be falling apart, we're going to ensure you get your money back. Nobody says that with a hotel. You invest in a hotel, you're on your own. So take it one step further, why is a hotel riskier than an office building? Anyone? So effectively, you could use it for different purposes. Different clients who have different needs could use it for different purposes. Fair enough. Another significant reason is when someone signs an office lease, it's not for one night. When you sign a lease at a hotel, you're effectively signing a lease, just like an apartment lease, right? But it's not a 12-month apartment lease. It's a one-night lease. And so every single night, hotels and hotel managers have to fill all of their rooms with and find different people that are willing to sign 1 night, 2 night, 3 night leases. An office building, you get someone in an office, you have them sign a 5-year or 10-year lease, you're good to go. You sit back, you take care of the building, and you collect the lease payments. But not in a hotel, right? It's much riskier. And consequently, investors demand a much higher level of return from a hotel. So again, savings accounts, anywhere from 0 to, from like 0.1 to 2% return. Office buildings, 4 to 6%. Somebody who invests in a hotel, in our business, they want a lot of money because hotels are inherently risky investments. So they want 6 to 12% return on that money, and that's before they put any debt on the property. Does that concept make kind of general sense? Yes, a little bit. No, have I completely confused people? Give me some feedback. No, yes, thumbs up. All right, good. I'll take 1 thumbs up. All right, let's keep going. So how do you buy a hotel? A typical hotel could cost anywhere from $10 million to $1 billion. How would you buy it? It's just like buying a house. Literally, it's just like buying a house. You've got equity, right? You've got your savings. Equity is the same thing as the savings, money that you actually have in your bank account. You put equity in, and then you go to a bank, and you beg them for a loan. And you get them a loan, and the amount that they're going to give you to loan and the interest rate that they're going to charge you is going to be directly dependent on how well they think that property is going to do. If they think it's if they think it's a good investment, or if they think you're crazy, that means if they think the profit that the hotel is making is very volatile, that it could go up and down year after year, or in between years, they're not going to give you as much money because they want to make sure that the money that they're lending you is covered. So typically, if you want to buy a hotel that's worth $10 million, you'd have to put in anywhere from $2 million to $5 million of your own money, and a bank would lend you another anywhere from $5 million to $8 million. Again, depending on how good the property thinks it is, or how much cash flow, how much profit the hotel is making. So, with that backdrop, let's go on. Let's give you a little bit sense of my background. So again, you saw from my transcript, and I started at University of Illinois for 2 years. The age to get into the bars was 19. Was not a good indicator for me. So I went to U of I for 2 years. Didn't really pay much attention to studies. For some reason, Purdue actually let me transfer in. Actually, I remember interviewing with Professor Adler, actually. So I'll attribute that to him. But they let me in. All my classes transferred over rather than grades to pass fail, and if I failed them, they didn't come over at all. So I was like, wow, this is a great new opportunity. I'm turning over a new leaf. And I got to say, and I'd gotten all my electives out of the way, so I took all the HTM courses, they were RHI at the time, and I did pretty well I did pretty well at Purdue. So I graduated from Purdue in 1991, 21 years ago. I worked in hotels for 5 years. It was a terrible year to graduate, not many jobs, but I went to go work for Stouffer Hotels as a management trainee. I think, and Stouffer was bought by Marriott ultimately, and is now actually part of Renaissance Hotels. But when I interviewed, when I was at Purdue with the guy that ultimately hired me, he told me that he thought I had a very analytical mind, and he wanted me he thought that I'd be great in stewarding. Well, I had no idea what the word stewarding meant. So I'm thinking, what is that, like wine steward? In fact, stewarding is actually dishwashing. So I'm actually glad I didn't know, because I probably wouldn't have, oh, here we go. Here we go. Oh, you're stealing all my thunder. Next one. Okay, so fortunately I didn't know what stewarding was, because I don't think I would have taken the job if I knew what dishwashing, that I'd be doing dishwashing. In fact, they didn't put me in dishwashing, they put me in housekeeping. So my first year and a half out of school, I did a graveyard shift in housekeeping. I opened up a hotel in Chicago, worked from 11 p.m. to 7 a.m., got to catch a few Cubs games during the day, it wasn't so bad, got transferred to another property in Florida to help open that up, also in housekeeping as an assistant housekeeping manager. became a director of housekeeping in Dublin, Ohio for Stouffer, then went to Adams Mark, a company that doesn't even exist anymore, as director of housekeeping. My boss there took me with him when he quit and went to Ritz-Carlton, so I went to Philadelphia, also as director of housekeeping. I really worked my way up in the industry through housekeeping, then switched over to front of the house, became a front of the house manager in charge of rooms division. I was 28 years old, and I was standing at the concierge desk when the new owners of the property I was working at, the Ritz-Carlton, came in. And it was what was Starwood, you all familiar with Starwood Hotels? So before Starwood Hotels purchased Sheraton and purchased Westin, they didn't have many hotels, and they bought this hotel. This was one of their first ones. And so they had a board of directors meeting. And I'm watching, these are the board of directors of this company coming in. And these guys are like 4 years older than me, like 4 or 5 years. And they're gazillionaires. And I'm saying, geez, what do I need to do to get from here to there? And so I started looking at some other industry options. And I was able to get a position with PricewaterhouseCoopers. PricewaterhouseCoopers is an accounting firm. And they have a division that does consulting for hotels and casinos. So I did that for 5 years. One second. So I did that for 5 years. And I realized that I knew absolutely nothing about finance. I knew absolutely nothing about how to buy a hotel. I didn't know some basic finance terms like EBITDA, which is probably a strange term to you guys as well today. EBITDA or IRR, internal rate of return, things that were completely foreign to me. I had to learn this all on the job because I never thought to really pay attention to much of that when I was going to school. I ended up deciding to go back and get my MBA. I studied for a year to take the GMATs because I knew I hadn't really done very well on my SATs when I took them originally. Studied a year for my GMATs. Decided if I was going to go to a business school, I wanted to go to one of the best. And so I applied to Wharton. And I can tell you with absolute certainty, when I did my interview at Wharton, had I not been a director of housekeeping, I would have never gotten into Wharton. But the fact is, it was pretty unusual for somebody who had come out of hotel operations to want to go to an Ivy League school and to want to go to and get a Wharton MBA was fairly unusual. And that was my hook. And had I not been in housekeeping, I would have never gotten that opportunity. I'm absolutely convinced of it. Now, I had to have the GMAT scores and all that to back it up, but I needed a hook. And that was it. And that hook has paid off for me for the rest of my career, which we'll get into a little bit more. So, keep going. So I completed my MBA while consulting. I got out of school. We can go one more. I got out of school. Again, I figured I was pretty much the only Wharton MBA who had ever been a director of housekeeping. And I figured maybe there was a way for me to leverage that on Wall Street. So I went and I actually went to Lehman Brothers, which, as you know, doesn't really exist anymore. I went to Lehman Brothers, and I was a stock analyst for 2 years. And what does that mean? So effectively, I covered the hotel stocks. So Marriott, Starwood, Hilton at the time were all public lodging companies, which means their stock, their equity, traded on the stock market. So I helped write research reports for 2 years about whether or not those stocks were a good value. After that, I left Lehman Brothers, and I joined Goldman Sachs. Go one more. And in Goldman Sachs, I worked for what was called the Whitehall Funds, which is a private equity fund. Remember we talked about private equity? So this is a private equity fund that invests in all kinds of real estate, but they had nobody that had any hotel operations experience. And so it was appealing to them. And so I came and worked for Goldman Sachs, and I helped them. I learned how to effectively buy hotels and also to asset manage hotels, which was to work with the properties to say, how can we figure out how to make more money at these hotels? Because if we make more money at the hotels, what's going to happen? Hotels are going to be more valuable, and the properties are going to sell for more, and the investors are going to make more money. And you're able to, and for the most part, we did that, and I did that for 6 years. I left Goldman Sachs in 2010 when kind of the whole industry, as you guys probably remember from a couple years ago, when the whole industry was blowing up. I went to go work for a combination hotel management company and investor called Highgate Hotels out of, actually out of New York and out of Dallas. They manage about 10% of the hotel rooms in New York City. I joined them as a principal. I was only there for about a year. Actually, it wasn't a great situation for me, but we worked it out to where they actually helped me launch my own company. They actually gave me my first contract to launch Fulcrum Hospitality. And so it was really important to me. You know, it's interesting. I knew I wanted to go buy hotels, but the problem with going out and trying to buy hotels is that you can go after a lot of deals. It's like I'll go back to the residential mortgage or residential housing. When your parents are looking for a house, they don't just they don't go to the first house and say, yes, I want to buy that one. They end up looking at a dozen houses or 6 houses or 24 houses until they find the perfect one. It's a lot the same way with hotels, and except the other challenge is it's extremely competitive because there are lots of people that represent a lot of money that are out there that want to buy these kinds of hotels or buy these kinds of investments. So I knew I didn't want to just go after that because I kind of like the idea of having a paycheck. So I decided to try to start off by doing asset management, which was getting outside companies to hire me to help them oversee their properties. Now, I'm not a property manager, right? I'm not a GM. I'm not a regional manager, but I'm helping to represent the interests of the ownership. So why is this interesting? I get to do really cool stuff. And let me give you a couple examples of some of the stuff that I work on currently on the asset management side. The Cosmopolitan of Las Vegas. Anyone hear of this property before? Anyone? All right, a couple. We've got a great nightclub there. It's like the highest grossing nightclub in the country, actually. I think last year, and these numbers probably don't mean anything, but last year it did $88 million of revenue, and which makes it the highest grossing food and beverage outlet in the country. Excuse me, I think it was like 82 million. The highest grossing food and beverage outlet in the country by about $30 million. There's only one thing. They don't sell any food. So it's all alcohol. $82 million effectively in alcohol sales in a year. But the Cosmopolitan opened up in 2010. It was built by Deutsche Bank. They completed the property after, they were originally just the lender. Remember we were talking about the relationships of lenders? They were originally a lender on the property, so they gave somebody a loan. But it was originally supposed to be developed as a partial condominium building, but the market fell through. The person who took out the loan couldn't pay it off, and so Deutsche Bank decided to instead to finish the property. You know, this is all public record. They spent about $3.5 billion on the hotel and the casino. It's a 3,000 room property. It's in between Bellagio and the new city center development, right in the middle of the strip. I ended up going out to Las Vegas probably every other week, more or less, because I helped Deutsche Bank represent their investment. So they've invested a tremendous amount of money into this property. I help represent them and their investment interest and their dealings with the people that manage the hotel on a day-to-day basis. Does that make sense so far? People understand like where that fits in? The difference between a manager and an owner? People are generally still awake? Generally? Okay, good. Another example, Hyatt Waikiki. I was involved with this property while I helped purchase this property back when I was at Goldman Sachs. I continue to still do some investing there. I actually don't think that picture of the hotel room is actually one of their hotel rooms, but I figured it had water in it and it looked good, so I thought I'd throw it in there. But that is actually the hotel. So I get to go out to Hawaii every once in a while. A portfolio of 5 Marriott and Renaissance hotels that are in Paris and Amsterdam. I'm actually going this evening, I'm driving up to Chicago, and I'm flying to Paris tonight for budget meetings on those very hotels. So it's kind of cool, you know. It's interesting. I travel a lot, which is both its upsides and its downsides. But it's really fulfilling. It makes me feel like I'm really contributing, like I'm really doing something here, and making a difference. So what else does Fulcrum do? What else does my company do? So I actually just hired my first guy about 4 months ago. I'm based out of New Jersey, right outside of New York. I have a New York mailing address. So I do, like we talked about, I do asset management or investment management. It's pretty much the same thing. I'll do transaction advisory. What does transaction advisory mean? So somebody wants to buy a hotel, but they don't necessarily want someone else involved in it on a long-term basis. I can look at their projections, right? When somebody's going to buy a hotel, they're not just writing a check. They're doing a lot of what's called due diligence, which is trying to figure out whether or not this is going to be a good investment, whether this hotel is going to make enough money to support the investment that they're putting in. So what they do is they do what's called 5-year projections usually. They will take, they'll look at how much money the property is making today, and they'll try to figure out over the course of the next 5 years, how much money will this thing make in the coming years? Will it be more? Is the market, what's going to happen in the market? Is the market going to get stronger? Is it going to get weaker? Was there a Super Bowl in that hotel market in 2012 that made all the hotels do that much better for the year? And that's not going to repeat itself in 2013. So you can't count on that kind of profit in 2012 for it to happen every year. You have to make various assumptions, and so sometimes they need help on that. Litigation support. Sometimes owners end up suing managers, and vice versa, because they don't think they're doing a good enough job. Sometimes they need expert witnesses who can say, yes, you know what, a reasonable manager should have really operated the hotel in a different way. I do that as well. Or sometimes a manager sues an owner because the owner is trying to get rid of the manager before the end of their contract, and so sometimes there's opportunity to represent the manager as well, and saying, yes, you know what, actually the manager did a reasonable job here based on my experience. Management contract negotiations. So a typical management contract is a document about this thick, and a management contract is what governs. Remember that we've got the hotel owner, we've got the hotel operator. Hotel operator is the manager, right? And this is a contract that governs how they're able to operate the hotel, how much fees you're going to pay them. That's a lot of times they need help in that because there's a lot of nuance. CapEx, which is the capital expenditure planning, like when's the property going to do a renovation? Is that renovation going to make money? Is it the right things to do? Should we renovate just the bedspreads and the drapes and the carpeting, or should we replace all the desks and the furniture? And should we rip out the bathroom and put in new tile and put in new tubs and new toilets and new lighting? What do we actually need? Because we can spend a ton of money on a hotel, but you only want to spend that if you actually get guests, if guests are going to value that, right? And so if a guest paid $80 to stay at your hotel last year, you only want to spend money on the property and put new bathrooms in, new rooms in, if they're going to spend $100 this year, $110 this year. If they're still going to spend $80, why invest? It's kind of funny. I haven't been back to campus here in actually about 15 years. And I was driving up, well, I guess Route 26. What is that? What's State Street? Thank you. There's that shop, is it down on the levee? There's that shopping center, and then I noticed what's called now is it Campus Inn. It's incomprehensible to me that property is still in existence. I don't know if you know which one I'm talking about. It used to be when I was here. It used to be a travel lodge. But why is it still there? You think it's pretty valuable land. It's there because they're making money, right? It wouldn't be there if it wasn't making money. Do you think they've put a whole lot of money into that property? No, but people still stay there, right? So if people are still staying there and they're paying you, and the condition of the property isn't pushing them away, why put more money into it, right? Those are the kinds of decisions that you have to make as an owner on a regular basis. And finally, sometimes as a lender representative or receivership. Remember when I talked about if a lender lent, say, remember that example with the hotel with the debt and equity? So say the lender lent $6 million on the property. And if the investor can't pay back that loan, they end up taking the hotel back, and they oftentimes they don't have that level of expertise either, so they need help on what to do with the property. So I'll do that as well. And then finally, buy hotels. That's what I'm trying to do. What I'm trying to do right now is I'm trying to work with. Now I can tell you right now, I don't have millions of dollars to invest in properties myself. But what I can do is I can try to be what's called an operating partner. So if I, first of all, are people still following this, or have I completely lost everyone? A little bit lost everyone, or no? Yes, please. Thank you.
You're kind of like a relator agent. You're finding for the investors hotels that they're going to buy.
Yeah,
You're helping them to buy them.
Yes. So that's actually shockingly correct. It's in very much a way. I'm effectively like a buyer's mortgage representative. Or when you go out and buy a house and you have your own representative and the seller has their representative, I'm very much in that regard the buyer's representative. The difference in what I'm about to describe, though, that when you go out and buy a house, your mortgage or your realtor isn't willing to put part of his or her money into that house as well and take the risk on whether that house goes, the value of that house goes up or down. And they're typically not willing to say, yes, you know what, you should be doing, these are the exact renovations you should be doing to your home to make the value go up, and to have a vested interest in doing that. That's the difference, because that's what I do. So my goal is to go out and look at all the hotels that are for sale around the country, sometimes even in other countries like Europe or Mexico, and look at their results and look at their performance and say, wow, this is a gem. It's either underperforming and there's opportunity. Maybe we can put a little bit of capital in. Maybe we can renovate the rooms and make the rooms nicer and reposition the property and make it a nicer hotel. Or this is it's a hotel that's doing really well and is generating all kinds of cash, and maybe we can get it to generate just a little bit more cash. So I go out and I try to find those great deals. Like I said, I don't have millions of dollars to invest in these properties, but I go to these equity sources. Remember all those equity sources, like those individual investors, the private equity funds, and I say, hey, I found a hotel. This is a great property. Here's the financial model. This is why you should invest. And in return for that, if they agree with me and they then let me asset manage the property, if that hotel makes money, and say I'll invest a little bit of my money, like I may put a few $1,000s, bless you, I may put a few $1,000s into the investment just to show them that I've got skin in the game too. If that hotel makes money, part of the deal is that I make a lot more than the portion of the equity that I put into the deal, because I'm presumably adding value. And that's the definition of an operating partner. Kind of makes sense? A little bit? Completely confused? Okay, I'll take that as a yes. Okay, let's keep going. All right, so what do we got? We got 10 minutes left? 12 minutes left? I'm going to try to go through this really quickly, because I hope there's some questions. So what I wish someone had told me when I was sitting in your seat. First thing, guys, if you're wearing a suit, you don't really need to iron the entire thing. All you really need to iron is this part and this, okay? It'll save you a lot of money in dry cleaning bills. Also, if you gain a few pounds, actually, as long as you don't try to button your suit, it still works okay. Okay, next one. Learn the basics on how to value a hotel and how investors think. It's incredibly important. Whether you're in hotel operations, whether you try to go a finance career or try to go an investment career, the most important thing I want to get across from you, you could think right now that if you're going to be a general manager in 5 or 10 years, there's no reason for you to know anything about finance. All you got to know is the basics of revenue and expenses. It's not true. This stuff is so important. I know all these terms are probably foreign terms to you. I know they were to me. They were to me until I was 28 years old. I wish they weren't. I know you guys have an opportunity. I believe there's a finance class that's offered as an elective over the course of your career. take the finance class. It's so fundamentally important. As a general manager or as a department head of a hotel of a hotel management company, to be able to understand not just what affects your department's profitability, but how the owner thinks about it and why, and how what you could be doing is impacting the overall value of the property is incredibly important and will take you so much further, in my view, will take you so much further in your career. Because when I go and I talk to hotel management teams, I distinctly see two different kinds of managers. Ones that get it and ones that don't. Ones that understand how to partnership with ownership to increase, not just to increase the P&L, but to increase the value of the property, and they get rewarded for that. And those that don't. Learn Excel. You don't have to be a guru on this, but understand the basics. I don't know if there's separate classes on this or not, but take the initiative. Learn how to do basic things on Excel if you don't know how to already. No matter what you're doing, it's going to come in handy. I guarantee it. The chance that what you're going to be doing 5 to 10 years from now is roughly 0% from what you think you're going to be doing. I was absolutely convinced that I was going to be a GM, and hopefully maybe one day I was going to be a regional VP. I had no idea. If you had told me when I was 22, 23, 24 even, that I was going to be living in New York City and I was going to be working for Goldman Sachs, I would have never, and I would have gotten an award in MBA, I would have never believed you. You don't say to yourself that, this is the one path that I'm going to do. And that leads to the next point of keep your options open. Don't say, you know what, I'm going to be a GM, I'm going to be a director of sales and marketing, that's all I want to do. It could absolutely be what you want to do, but keep your options open. Learn as much as you can about these other areas. Allow yourself to have multiple paths to choose from. Don't get pigeonholed, and differentiate yourself. One more. Try to learn everything you can in one niche area that really interests you. It's amazing how many meetings that I've gone to, or pitch meetings where I'm trying to sell work. I'm trying to get an assignment, and because I have in-depth knowledge of one particular area, I can talk about that area and really impress people with that area. And there may be 4 or 5 other areas that I really don't know nearly as well as that area, but by knowing all the in and outs of one area, like revenue management or distribution, and how things like Expedia and Travelocity come into the mix of demand for a hotel, sales, technology, just take one area that interests you and really get it. So this is kind of a pet peeve of mine. Don't network just to network. I see a lot of times students that are just kind of try too hard in terms of conjunction with when opportunities with executives or when they get exposure to different people in the industry. Don't network just to network. It'll happen naturally. And if you're just there trying to get in front of somebody, it's gonna come off very false, and it's gonna be counterproductive. Just try to just focus on opportunities for where you can get incremental exposure, and give yourself those chances, and then networking will come along with it. Your friends, the people sitting around you, they're all going to be industry leaders in 20 years from now. Stay in touch with them. And it's a completely different situation now than it was 20 years ago in terms of, with Facebook, et cetera. Obviously, you can stay in touch with people a lot easier than you could have when I was in school. But these are really important people. The people sitting around you in this class, they're going to be industry leaders in 20 years. You don't want to lose touch with them. It's going to be incredibly valuable relationships for you to leverage as you go along in your own career. So plan on working incredibly hard for the next 5 to 7 years after you get out of school. Just do whatever it takes. My view is work-life balance is for when you have a family, when you have when you need that time to spend with your kids. But everything you do and the impressions that you make in the first several years of your career mean everything. Just do everything you can. Work incredibly hard. Young, your body will recover. Just do it. It's a fun industry. Like I said, some of the most important people in my life today are people that I worked with 20 years ago at that Stouffer Hotel in Chicago, even in housekeeping. Learn how to manage your own expenses. If you're bouncing checks, it's not a really, you want to figure it out now. This is going to set yourself up not just from a work standpoint, but also from a personal standpoint. And the next point, the last point here is financial illiteracy, in my mind, is inexcusable. Understand the basics. Do what you can to learn this stuff. It is going to get you so far. It's important. Focus on it. Like I said, I know some of these things like finance are electives. You don't have to do it. Do it. It'll make all the difference. So I think I've got only about 5 more minutes left. I'd love to answer questions if anyone has any. Yes. I'm sorry, I can't hear you. How do you get your name out there? Yeah, so the question was since you're a new company, how do you get your name out there? It's a great question. The only reason I was able to launch my company was because of my experience. When I first put out the press release 18 months ago, in the title I said, former Goldman Sachs managing director launches Fulcrum Hospitality. It in and of itself creates, just having the name Goldman Sachs in the name in the title of my press release helps exposure. And just really over the course, this goes back to the industry people in the 20 years. I've been out of school now for 21 years, and just through my career between both operations and consulting and then finance and even business school, you just develop relationships. And these are people that ultimately, I've got, friends that are, right now I've got friends that are in some of the highest levels of some of the various hotel companies, some of the various investment firms. People want to work with other people that they know and that they trust. That's the source of probably 80% of my business. It's all relationships, but those are not relationships that can be falsely created. They're based on kind of long-term interaction. It's not just you show up at a networking event and you're suddenly going to get business. Anyone else? There's nothing. Nothing of this was confusing. No questions. Is it interesting? Does anyone understand something that they didn't understand previously about how a hotel is structured? No? Well, in any case, thank you very much for your time. I appreciate it.